Good afternoon everyone, this is Connor from Zenfinex and welcome back to the Zenfinex monthly forecast videos for July. Today I'm going to be covering a crude oil forecast by running over the recent supply and demand news events, which has really set this tone for where the market is heading. Then I'm going to move on to the chart and mark key levels for where trading opportunities could come from, and at the time of recording this video oil is trading at around 73. Okay, so let's take a look at some supply data first, and we had data from the American Petroleum Institute, and that showed a draw of 7.6 million barrels in inventories for the week ending June 25th, so this week. Forecasts were pointing towards a 3.6 million barrel draw, and just to touch on the fact that last week we had a 7 million barrel draw, which was also recorded on the inventories. Now this is where the support for oil has really come from the supply side. Also, all eyes will really be on the OPEC meeting next week. The output policy is going to be discussed, and Russia is considering a potential supply increase, while some OPEC nations are also discussing the potential for a supply hike in August. Now if we do see this, then I would expect oil prices to fall slightly, just back from where they were, maybe back below $70 a barrel. Meanwhile, Iran indicated that nuclear talks with world powers could be extended beyond August 2021, and the possible gain then in fuel supply is set to be delayed as well. More supportive news for oil prices really. With respect to demand factors, it really is about fuel demand being boosted by key markets including the US and China, which continue their economic recovery from COVID-19. Now this narrative is really likely to stay the same throughout summer, definitely throughout July, especially if people start going on summer holidays as well as planned. Then oil demand is just going to keep increasing, and we need to try and maybe counter this with an increase in supply is what's going to be discussed. Okay, so on the chart for oil now, let's have a look at some key levels really. I'm on the daily chart at the moment, I'm zoomed quite far out. I just wanted to quickly show you where we are in comparison to the beginning of the pandemic. You can see that the drop we had in the pandemic from February through to March, all the way down into April really, you can see that when this all started really back in the beginning of February last year, we're actually now nearly $20 a barrel above that pre-pandemic level, which really shows the strength in this oil market at the moment. Now you can see on the daily chart, I think it's quite clear to see that we've broken that initial resistance around $68 per barrel, and it's just been really a grind to the upside. Each candle hasn't been necessarily impressive, slight gains each time, but they're consistent all the way through. Only 3 or 4 down days in this whole spell of about 20 days for oil. Now the one thing I do want to touch on is just how far away we are from the 200-day moving average. Last time we tested the 200-day moving average was back in November 2020, and to be honest it's the 50-day moving average which is acting as support level at the moment. We could see a price drop into the 50-day moving average, maybe around $68 per barrel, which is where that last previous structure high was. Just want to point out as well that the RSI indicator is loitering around in overbought territory, so it would be natural for oil to pull back, but if we keep having these supply surprises to the downside, then again the fundamentals are going to keep this really strong. On the 4-hour chart, there's a couple of things we can look at. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. We can look at this 4-hour order block as a potential buying opportunity. OB entry, order block entry. The reason for that is because this level did previously break this structure higher here up at $72 per barrel. So what I wouldn't mind seeing is a fall into this level, and then we can look higher. And I think buy and take profits for July for oil I think if we can reach $75 per barrel, that would be great. If we break above $75, then we might look towards something like 78. But again, crazy numbers when you think about how much trouble oil was in at some point last year. What is something to look out for is, let's say we have a fall in the fuel demand prospects. We know that the UK have been delaying their easing of lockdowns, putting people's holidays in jeopardy. If the Delta variant continues to sweep through and we have a bit of a setback in COVID and fuel demand falls as well, I would expect this market to fall slightly. And where I could see it falling from is if you have a look at this structure high that I've marked here, you can see that we've actually gone and wicked. Oh, sorry, I was meant to mark this as a take profit level, my bad. There we go, take profit. You can see we actually wicked above this level here. And we actually grabbed some liquidity from the top side, which sometimes is a sign that the price wants to fall. Selling take profits really, if I could just mark maybe selling profit, I don't think we fall much below $70 per barrel now, if I'm being honest. I think that this might be potentially the floor of the market for July. I certainly do not see it falling below the 200-day move, the 200 moving average, which would be our extreme take profit, maybe at around $68 per barrel. So for me, they're the key levels, those two there to look out for if you're looking for any selling opportunities. It would mean we have to go and break below this order block as well, which would be a sign that the price wants to fall a bit lower. But again, I would be interested in buying on dips on the base of fuel demand recovery and the fact that we keep seeing this reduction in inventories. So that is it for today, guys, for oil. If you enjoyed this video, please like and subscribe to the channel. Make sure you've got your notifications turned on as well. Then you'll never miss a video that we post out. We also really appreciate the comments. We read and reply to every single comment on the comment section. Hope you all enjoyed this oil video, guys, and I'll catch you all for the next video, which will be next week.